And there you have it, the closing bell from the New York Stock Exchange. The Dow Jones was up and down throughout the day. At one point, it was up more than 500 points, but ended up giving that all back and ended the day down about 180 points.
It was a similar story for the S&P 500, which ended the day down more than 0.5%. The Nasdaq ended the day relatively flat. For more, David Ragland joins us now. He's the Chief Executive Officer of IRC Wealth. David, can you talk to us a little bit about those forces driving the market today?
You had a lot of news sources hitting us today between Biden's announcement on one hand, Zelensky talking about maybe not joining NATO, to Putin coming out saying he's not going to send oil out of Russia during the remaining of this year. So I think you got hit by a lot of news flow today. So you were up on some news, down on some news, and we have a lot of lack of market participation right now. I think a lot of people are stepping to the sideline. So when you have fewer buyers and fewer sellers, you're going to have days like this that are very volatile. And these very volatile days can be a preamble to the market trying to find a bottom somewhere in this area or maybe a little bit lower.
It's interesting, people just sitting out, on the sidelines trying to figure out where this is all going. And of course, we know, David, that uncertainty is typically a big driver of the market. You mentioned President Biden's announcement banning Russian energy supply. Won't that ease some of the concerns surrounding being economically involved with a country the U.S. is actively sanctioning? I mean, this kind of essentially resolves the question of will we or won't we, correct? Now we know we've pulled out on Russian energy.
Yes, the market hates uncertainty. Now that we've pulled out from pulling oil in, that's good. You're already seeing companies. We just saw today, later this afternoon, Coca-Cola is pulling out of Russia as well. So Apple did it last week. So the uncertainty of economic ties, businesses being exposed to Russia or the Russia economy is already happening. And so the private sector is actually taking the lead to kind of reduce their exposure to Russia at this point, which is a good thing. More clarity provides opportunity for bottoming in the market. Hopefully, in the next few weeks, we can get more clarity, enter into the second quarter. We'll have quarter-end reports, so we'll have an opportunity for advancements into the market, hopefully sooner rather than later.
And David, when do you think things will improve? I mean, people who are already invested in the market are going to have to sit out this volatility that the war is causing. Are we talking about improvements at the end of the conflict, or will things get better before?
Well, the market's always a forward-looking indicator. So the market's going to look past the war at some point. The market is trying to test our resiliency as investors, pushing the market down as far as it possibly can get to change from weak hands to strong hands, those shareholder ownerships. So being strong enough to last through the war, but the market's going to look through the end. It will start moving up when it feels like there won't be expansion to other countries. Then I believe the market will bottom and actually go up substantially before the end of the conflict. If we just get news of progress to peace, I think that will be a big upside driver.
So you are bullish then on the market overall?
I think at this point, the average stock on the NASDAQ, the S&P, a lot of them are down more than 20%. So you are in almost even bear market territory for a lot of stock on the stock market. Maybe the S&P is not down 20%, but you see the NASDAQ down dramatically. You see the Russell 2000 down dramatically. You actually saw today the Russell small cap index being up most of the day. And so I think what you're starting to see on the average stock is a bottoming process happen. Now, it's not pretty, it's ugly, it takes time, it takes back and forth. As I said earlier, when you see
I guess for some people
today,
it's, oh, sorry, David, didn't mean to interrupt you. Go ahead.
Well, you just see days like today are actually very good days. Big down, big up, big down. That's when you're starting to see that bottoming process happen. That is actually a good thing for a longer term investor.
All right. Some people see it as a buying opportunity. David Ragland, Chief Executive Officer of IRC Wealth. Thank you so much for joining us. We appreciate your insight.
Great to be with you.